So let's get back to the world markets where, of course, two of the biggest political capitals on planet Earth, Washington and London, are very busy right now. Of course, you heard a story overnight about the impeachment move made by the Democrats in the House of Reps, impeachment inquiry against U.S. President Donald Trump. Just that later in the day, then earlier in the day, we got the UK Supreme Court talking about the need for Parliament to get back to business and says the shutdown of the Parliament by the Prime Minister Boris Johnson was unlawful. All that is roiling both London and Washington overnight, and that actually affected the Wall Street yesterday. So how do we trade the geopolitical politics as we see it right now in these two countries, and as it's reverberating across the asset classes around the world? Stocks are already down. Gold loves things like this. So gold prices moving up very strongly. S&P 500 yesterday on Wall Street went straight down. So let's talk to Uche Naminis, who is the chief market analyst at Eagle Global Markets. He's joining us live from our studios in downtown Lagos at the Nigerian Stock Exchange. Uche, good morning. Let's get it started. This is as hot as it can get on the political front. So do you think this is raising what you call the political risks for everyone who is trading the global marketplace right now, at least over the last 24 hours?
Wilson, thank you for having me. Good morning. This risk of political downside tone, it basically is just highlighting that the remaining months of the year would continue to be exciting in the global market space. And this is not what we consider as likely, although from the American point of view, the chances of this impeachment going through is next to zero, and I can explain that. What happened is, if the House the House of Representatives gets to vote for in the impeachment inquiry, as they've launched yesterday, it has to now move on to the House of Senate. And there, given that the Republicans own most of the Senate, they will shut it down. However, we understand with the market, it is the risk that's been priced in. So a new incorporation of this political risk is looking to push market to the downside. So we saw the S&P and the Dow losing about 100 to 200 points on the back of that news.
Okay, so this is when you talk about fear, whatever it is, gold loves such such things. So gold is bouncing, shining brighter on this. Do you think yesterday and what we've seen overnight was a bit of a knee-jerk reaction, or do you think the impeachment inquiry in the U.S. and the Parliament in the U.K. Coming back into session today will keep what you called fear, concerns, uncertainty at an elevated level for the markets today through perhaps the rest of the week?
Yeah, it's very correct, Boston. And you need to understand that prior to all of this news coming out, you should understand that the market has extremely been fragile. It's like we've been working on the thin life wire. So every time you get such significant news get to be pushed out to the media, investors and market participants gets to react, and you need to understand that at that point in time, people really don't need to wait for the actual event to materialize. They just need to trade on the idea of the event, and that's basically what we are seeing. So you can call it knee-jerk reaction, yes, technically that's true. But however, if investors continue to see that this political risk is looking to materialize, they will continue to react that way, and you will see safe haven asset like gold, silver getting to appreciate on the back of such risk of sentiment. So yes, you're very correct. We will see such knee-jerk reaction. You see people acting out of sentiment, out of their emotional, should I say, predisposition. But that is basically what the global market is. That's what drives price, really. It is not the event in itself. It's the idea of the event and how investors and market participants see and understand what those risks mean to them and their portfolio.
So if we take this a bit on a medium to long term view in terms of political risk quotient for the markets, Uchenna. Brexit is October 31st, but we all know it's not going to be over by October the 31st. We're heading to 2020 elections in the U.S., so the whole issue around whether President Trump goes for an impeachment inquiry or is impeached or not will continue to be there. So we're looking at all of these, including the extant issues such as the trade talks. Yesterday, President Trump used his address at the United Nations to fire some shots at Beijing over the trade talks, which is still pending. And we're all thinking that by October we'll have a bit of a reprieve, as it were, and things will go on a little bit smoothly and get a bit less bumpy, as it were. So this is taking it from a week view to a month to the end of the year, perhaps to a year view. What's your outlook on this period, time frame, Uchenna?
So for medium to long term, we need to now be cautious. We've mentioned several times that we've been on the average defensive in terms of portfolio allocation or reallocation, and also get to advise our clients on the back of that. It is going to be quite interesting, and right now, no one can exactly pinpoint what the actual outlook will be when it comes to Brexit in itself. Even Boris Johnson and the UK government exactly don't know how they would proceed. And now they are having fresh risk, like sort of Parliament asking for him to resign, given what has happened, the new recent Supreme Court ruling. And the problem now is, if Boris Johnson gets to resign, what's next for Britain and in terms of Brexit? So you get to this place of not exactly sure what they are getting to do, and that in itself affects monetary policy stance in terms of the Bank of England, and that will continue to add fresh risks into the British pound and also UK asset, and also on the global front. And you go to the US part of it, you also see such significant risks. Now we don't think the US-China is going to come up with any trade deal, because now the Chinese is more of an incentive for them to just sit back and relax, that Donald Trump might not be here into the 2020 election, so there's no need for us rushing in. One, he's facing that impeachment, and two, his popularity vote is getting to dwindle, and it's going to be a win-win situation for them to just wait on that. So if we have another escalation due to the Chinese just retracing on their commitment, that in itself will add fresh risk, because if you look at the market this year, majorly has been driven by the hope of trade optimism and trade settlement. So if we take that out of the mix, that is going to add fresh risk into the market. And right now, except people just don't try to be honest, the market is exactly very overvalued. And if once those things are taken out of the space, we are expecting to see high volatility in the market space. So we always tell our clients, and we'll try to advise people, that they should be defensive and also be cautious, because the risk, they're not going away. Apparently, they're just continuing to increase.
Uchenna, I'm sure you see the global markets perhaps a lot more than I do, but I'm checking through right now, and I can't see any single positive reading across nearly all asset classes, with the exception of treasuries and bonds for Germany, US, and all of that. The European markets opened today very sharply lower. The German DAX is more than 1% in the red. The U.S. stocks futures are all in the negative territory. Gold is even trading a bit of a water as we speak. Crude oil is down about 1.4%. U.S. oil is about $56.48 a barrel. Even Bitcoin is down about 3% as we speak, the crypto king. So, how much fear do you think is out there? Do you think, even with gold, it's becoming very difficult? Do you think currencies will be a place for anyone to find a place to hide? Maybe in the US dollar, do you think that is a safe haven anywhere on the planet right now? It looks like everyone is under the weather.
So with the way, due to globalization of interconnectivity with global economies, a lot of developed economies and also emerging markets are highly dependent on the US and China. Now, if we continue to see heightened market risk, you will expect currencies to actually get hit hard, and also the emerging market space. However, as I get to mention, the U.S. economy compared to the rest of the world has shown significant growth, and that in itself has created that growth differential that makes the U.S. dollar a makeshift safe haven currency at the moment. And that's why if you get to watch during those times when the Federal Reserve gets to cut interest rate, you still find out that the USD will get to appreciate in value, and that's because irrespective of how easing or accommodative the Federal Reserve is looking to go, they still, the U.S. economy still come up on top as the economy that is doing better than the rest of the economy. So basically, when we see heightened market risk, we will expect the U.S. dollar to continue to appreciate, as investors will still fancy to come to the U.S. dollar for investment. However, it is very noteworthy that the rest of the world and also risky assets have been significantly overvalued, and that is going to bring so much downside risk.
I just checking with the dollar index right now, the DXY. Uchenna, and that is doing pretty. Dollar index is jumping actually since about 12 a.m. This morning. The DXY index is reading about 0.22%. That's a major jump there for the dollar. So the dollar looks like where the safe haven really is now. Even gold has been elbowed, just pushed aside a little bit by the greenback. Thank you so much, Uchenna. Have a great day and see you in the few days ahead. Thank you so much coming to on the program.